Welcome all to today's webinar, Digital Payments in India, Opportunities and Regulations. This is being hosted by Empower Indian Association in this law. And today we have a very good panel of speakers, one of the best that I've ever had the pleasure of introducing. So for this event, we have Mr. Avimukt Dar and Shreya Suri from Indus Law as the moderators. Avimukt Dar is the founding partner and a senior partner with Indus Law. He's been recommended as one of the top 100 lawyers in the country and has extensive experience in corporate commercial investment laws. Shreya joins us from Indus Law as well. She's also a technology and advisory partner. She's also been working with Avimukt, and I've had the pleasure of interacting with her in the recent past, and both of them bring a lot of expertise on the current field to this discussion. On the panel, we have Dr. Aruna Sharma. She's a former secretary in Steel and has worked in a lot of issues. She wears a lot of hats around the policy scope, but today she'll be wearing her hat that she's been working with the RBI in the past on digital payments. And then we also have Mr. Rastogi, who's one of the most leading digital payment specialists in the country. He has been part of multiple committees instituted by RBI and has extensive domain knowledge. He's also been awarded as one of the 50 most influential payment professionals in 2019 by the World Payments Congress. And lastly, we have Mr. Montek Singh Ahluwalia with us, who is one of India's most foremost economists, as well as being a former deputy chairman of the Planning Commission of India. And he has also worked closely with both the IMF and World Bank. So the way we want to structure this discussion today is that we'll have the panelists speak, moderated by Mr. Avimukt Dar and Shreya Suri. We'll have the panelists have their say one by one. And after that, we've kept the chat open for all of your questions. And at the end of the session, we'll be taking those questions on. Over to you, sir. Thank you so much.
Thanks a lot, Arnav, and thank you very much for the panelists for joining. This is indeed, as Arnav mentioned, a very high-powered panel. So for our audience, I'll just do a little bit of setting of the background. So the Reserve Bank of India is the key regulator for all financial services in India. It is also the residual regulator of financial services which are not regulated by the SEBI or by the IRDA or by any other agency. In this role, the Reserve Bank has taken online payments very seriously. At Indus Law, we have advised over the last decade on a plethora of venture capital transactions. We have seen a lot of startups gain VC funding and scale up to become unicorns, and some of them have even listed now thanks to the ecosystem that they are in. The Reserve Bank has always focused on consumer protection in this ecosystem. If you remember, a decade or so back, there was this concern of vanishing companies in e-commerce space. And the Reserve Bank stepped forward with the intermediary guidelines to ensure that there are nodal accounts in place so that money of merchants is safely protected. It should not be that a company can take a lot of volume, what they used to call the GMV, and disappear with it. So since then, followed with OTP, the Reserve Bank has been cautiously trying to encourage greater uptake in card usage, greater uptake in online payments by essentially sanitizing the market. Now, over the last 3 years, especially after the Puttaswamy judgment of the Supreme Court, which brought in the concept of privacy being a fundamental right, the government has proposed a personal data protection law, which will set up a data protection authority. As we know, this law is still not even being passed by Parliament, let alone enforced. And as such, India has been struggling for the last 3 years without a data protection authority. So the Reserve Bank, like the Caped Crusader, has jumped into the fray and has decided to regulate and be the protector of all financial data, which is also sensitive in nature. And in that sense, now we wonder whether, in terms of the data protection role of the Reserve Bank, have they already gone too far, or are they going further than any of their brethren across the world? So my first question to Ms. Sharma is really in the context of the RBI and the Data Protection Authority, which is yet to come. Do you think that the RBI has gone so deep into data protection today, with especially with the card on file data protection, to make sure that payment aggregators have no access to data. Do you think they've gone so far ahead that tomorrow, if there's a data protection authority which comes in, we might have a similar situation as we saw with CCI and the TRAI, where you had overlapping regulators? Do you think that this is unusual, and what do you think should be the approach of the RBI? Should they wait and watch for the DPA to come, or should they keep on soldiering on?
Absolutely, very, very pertinent question you have asked, because data protection law has to be like an umbrella, right? Which will be applicable to the various transactions, not necessarily the financial transactions alone. And it will take care of all the personal data, which has come out very, very clearly in the Puttaswamy case. That personal data, and same was protected even in the Aadhaar case, where the governments can ask for an Aadhaar only if the government is paying something. So if there is an outflow of money from the treasury. So in the sense, the privacy is something, as said in the constitution, is very, very vital. And data protection law has been talked about under that context. But that will be the umbrella law. Now that delay is making the various elements, whether it is something related to e-commerce, then you have a consumer affairs coming with a draft, or the commerce ministry coming with a draft, or corporate affairs coming with a draft. And similarly, in the finance, the RBI is taking some steps. Now that is where what will happen in the future is there will be some clashes. There will be an Besides overlap, there may be contradictions, and that is the point of worry, because ultimately many things will get interlinked to the financial transactions as we are moving ahead. And now what is being talked about, that yes, cyber security is important, the financial transaction security is important, there is no denial about it. But having said that, it is very important to what extent we are working, because the intention of the country is to encourage digital payments, which has many players. So you have very active merchants as well as the aggregators who form the backbone of your digital payments. Now, under the new scheme of things, which is being talked about under tokenizations, we are thinking to separate them completely. So it is going to be with the card managers, that is the Visa, the Mastercard, the NPCI in terms of Rupee cards, right? Or as they are looking after the entire transactions that is happening. So it will get concentrated in the hands of three. So now I don't know whether it is good to have this kind of a concentration. That is a question we must ask. Number two, then the issuer banks will have the data anyway, but then the merchant will get tied up to a particular bank. So that is not the scheme of things under which everybody is operating, and there has to be a free flow when everyone is operating. So that is the question number two, that will the merchants get tied up with a particular bank under this scheme of things, or will they have a freedom to operate with the multiple banks as they are doing today? Number three, will it be a reverse and end up into cash again, the cash economy, where you, instead of card of payments, you will have an entirely different reversal of what all efforts has been taken towards the digital payment, and you will have a cash payments again happening, which is again a very, very complex nature, and slowly we are moving ahead. That is number three. And the fourth is, especially when we penetrate into deeper area, and that is the last point I'd like to make at this point, is that you will expect the anybody who is paying an EMI in a microfinance, which has gone digital now, to enter the card data or your tokenized 12 digits or whatever it is, depend on OTP. Whereas with somebody's help, they have done it once and they remember their CVV and they are able to go ahead and operate upon it. Then there are standing instructions which were made enabled on the debit cards, which were there on the credit cards, were enabled in the debit cards, whose population is much more than that of the credit cards. So will it be disrupting that? So all these five questions need to be answered very carefully before we push this under the name of security, under the name of privacy, under the name of data protection. That are we able, do we have answers for all of them, or do we need to tread on it step by step in a careful manner? And more so in a harmonized manner in ultimately what is going to come, because financial transaction is integrated with everything. Like even if you are doing a commerce exchange, financial transaction will fall in. So all this will have to work in sync and harmonization with each other.
That is actually very true, Dr. Sharma. In fact, that is one thing which, if you observe the RBI, when they brought in the intermediary guidelines to regulate e-commerce, at that time, a lot of e-commerce companies were fly-by-night operators. India's consumer protection laws were significantly weaker. In fact, they did not even adequately recognize online e-commerce. So, as different ministries, including the Ministry of Commerce, are tightening laws for consumer welfare, should it still be RBI's forte to try to consider data protection like a free good? It has a cost attached to it. It is not something which is cost-free. And if it comes at the risk of innovation, then India, as a developing country and emerging economy, will significantly get slowed down. And in fact, Dr. Rastogi, in this context, I wanted to understand that, do you think that the RBI overreacts when you hear news of data leaks? There have been news over the last 1 year where e-commerce companies have had data leaks. But surely that is something which happens in the West as well. It should not trigger a knee-jerk reaction, for instance, to say that payment aggregators will not have card-on-file data. Let's take the data away from them. And surely banks are not immune from data leaks either. So there is no test that a bank which is following similar protocols in terms of data security should be immune.
So you have seen, you have heard one side of a story where the government says that RBI doesn't have any role here and other parties has role. And this is the problem, the academy. But let me give you a little bit background. The first act, which is Indian Information Technology Act, was passed in 2000. Which given a little bit about how the data will be stored, who will be using this data and whatnot. After that, nothing happened in this area and nobody thought on this line that this is also important. Today, when we have a 3 billion or 3.5 billion transactions happening on UPI every month and remaining another card business, suddenly everybody has woken up. And it has a knee-jerk reaction when every second day you have the data has been breached. People have taken the data, or people are replicating this data and misusing it or selling it to the people at cost. And then everybody started gearing up. 2 years, Sri Krishna Committee was formed way back in July 2018 and nothing happened. No act had been passed, what is happening. So what RBI has done, RBI has not gone to the area where they're not supposed to. They are only related to the payment side, where the money is there, and they have been authorized as per the law. So what they have said that they have divided that entire e-com piece in two areas. One is that e-com platform, and second is the payment side. Because there's a lot of problem in not only the AML, there are terrorist activities, the money is moving to other side. So you need an audit trail. What they have done, they've created payment aggregator from payment gateway. These are the two different things. They have never said that they are going to encroach upon the area which need to be regulated by either the Ministry of Commerce or MIT. MIT's area is security, data security. So and at this point of time, somebody has to really take a thing that who is the ultimate, because you can't have three fathers of e-commerce: the Commerce Ministry, the MIT, and RBI. The second thing is that, when the cards where MasterCard and Visa decided that the Megastrip card need to be replaced by the EMV card, at that point of time, there was a debate and it was decided there were two options. Either you do the EMV compliance, which was the huge cost to the country, about 960 crore rupees, or you follow the Aadhaar. So authentication was to be replaced from the MPIN to Aadhaar. But finally, it was decided to go ahead with EMV compliant. Having made the EMV compliant card, the card users has to do the certain certification, which they do not do it. India has about 40 million merchants. All are receiving card data, but they are not certified as per the law, as per the certification status, which I think government has also stipulated that PCI DSS and PADSS compliant. So the card details were being used or misused by the people. In 2019, January, RBI told MasterCard, Visa, and RuPay everybody that please follow tokenization, which is a global practice. Now the tokenization, they didn't follow. Even today, most of the banks, most of the merchants, they do not follow tokenization. There are two kinds of tokenization. One is the device tokenization and there is a cloud tokenization. So as a last recourse, RBI has asked them to stop it. Now you have 480 million families in India, and they have a couple of transactions which are making, their recurring payments, be it Netflix, be it DTH, be it other places. Only 14% are being done by the card. Remaining are being done by the UPI, and believe me, that everybody is moving to UPI because it is more convenient and other thing. I'm not saying that RBI has done a good thing. RBI should wait for some time to come the Data Security Act passed. And after that, a common decision and a complete decision to be taken by the government and the regulators that who is going to regulate, what they're going to regulate, and how they're going to regulate. Otherwise, it's a five blind people visualizing an elephant and trying to do it. At the end of the day, yes, there is a loss. People are losing money. India has got 24% people who are number literate. They do not understand the digital transactions. The frauds happening. People are losing money and then, right? Who is responsible for that? Somebody has to be accountable. A lot of digital literacy is required. Or the government is doing it. Nobody knows. So my request that, yes, there is a pain for some time, but there are certain things which everybody has to follow, and that is also required in the interest of the public by and large. Thank you.
That's right. In fact, this reminds me of this quote, which is frequently attributed to the former US President Ronald Reagan, where he said that if it moves, tax it; if it keeps moving, regulate it; and if it stops moving, subsidize it. So that pretty much is, where we sometimes seem to be, that as the scale increases, the scale of regulations have also increased. And the difficulty we face in India especially is the startup ecosystem is something which did not even properly exist in Mr. Reagan's time. And those are companies which at the outset are SME, but scale up very fast. And if you kill them or regulate them very heavily at the SME stage, then you will never have the innovation. On that note, I wanted to also bring in Dr. Ahluwalia. As Arnab mentioned, Dr. Ahluwalia is the most distinguished economist that I have spoken to in any case, and he is also a former deputy chairman of the Planning Commission of India. Dr. Ahluwalia, do you feel that there is a risk of over-regulation of fintech as well as e-commerce with these increasing layers and layers of data security which are being imposed, along with data localization which is being imposed incrementally on this industry? And would this not lead to a very high level of concentration where only perhaps 3 or 4 big players are able to effectively comply? And isn't everybody afraid of big tech? And is this not something where the regulation seems to be so self-serving that it is falling upon itself and leading to the rise of those 4 big players, which everybody is worried about?
Well, no, thank you for asking me. I should say, this is an area I'm deeply interested in, but I'm also profoundly aware that I just don't understand all of it. But, the basic point that you're making, it's absolutely true that the digital economy, which relies on the tremendous economies that come with network effects, is going to lead to the rise of a few players. That's not just true here, it's true all over the world. And because of that, the structure of regulation that you want is very important, and we should watch what other countries are doing, because all these big players are currently being subjected to a huge amount of regulation in other jurisdictions also. But at the same time, I fear that other jurisdictions have a much better tradition of judging when the regulation is excessive and keeping in mind the interests of the consumer, whereas we don't. I mean, our tendency, once you bring in this notion that the private sector must be disciplined, everybody will be very happy to discipline them. So the biggest danger in India is that in the attempt to control the growth of the big guys, we actually kill the industry. Now, exactly what we do, frankly, I don't know. That's why, personally, I think whoever's orchestrating policy needs to create an environment in which there's a clear recognition that there are multiple stakeholders and that the interest of the different stakeholders is not necessarily the same. And you need to, at the same time, it doesn't mean that every stakeholder necessarily is making the right point. Because if you're moving into a world that is going to be dominated by basically digital transactions, it may well be the case that the economies of scale and the economies of compliance will ultimately operate against the very small guys. And I think we have to recognize that that's part of structural change. So I'm not actually answering your question. I'm very aware. I'm not answering your question in a very forthright way. But my bottom line would be that we should watch what others are doing. And the fact that we are worrying about these issues, the fact that we are saying regulation is necessary, the fact that we are saying we don't want a couple of guys dominating the whole space, this is entirely reasonable. I mean, this is happening everywhere. But
Yes.
exactly what we should do is something where we need to keep our minds open. There is this concept of a regulatory sandbox, that when you're starting on something, rather than kill the innovation, let it happen so that enough people get used to it before you start with heavy-handed regulation. So I would be very much in favor of retaining flexibility. That's point number one. And point number two, I've generally felt that, looking at what other successful countries are doing is usually a good way of making sure that we don't do something totally wrong. Unfortunately, this rule is now seriously jeopardized by the fact that by any objective measure of the rate of movement, the most successful country is China. And in my view, if we replicate what China is doing, that will be a recipe of disaster for us. Because I don't think we are the kind of society that can organize itself the way the Chinese are doing. So frankly, if regulation is needed, I think it's better to have the big guys competing with each other and maybe competing with foreigners rather than have all the big guys kind of, as it were, drowned under tight regulation by official authorities. So that's why I wanted to join the seminar, but not be very visible because I'm kind of really learning.
No, thank you very much, sir. In fact, you made a very pertinent point when you said we should try to see what successful countries are doing. And the definition of success has become extremely subjective. We saw this in manufacturing in the 80s and 90s, and I fear we are seeing a greater degree of protectionism in technology as well. For instance, the European Union is at the vanguard of data protection thanks to the GDPR. But Europe is a continent where the last major tech startup was SAP, and that was founded in 1972. So it makes you wonder, as to the definition of whether Europe is successful at regulation or are they successful at innovation. Similarly, I think China is a great example because I think a lot of governments, not just in India, but across the developing world, see the Chinese playbook and try to carve out the chapters which are not fun and try to keep the chapters which seem to be strong and nationalistic. But one important thing for everyone to bear in mind, is that China is grappling with the demons of its own big technology companies, its national champions at this point. The foreign companies, they had successfully managed to outmaneuver a decade ago. So in India, we have
not outmaneuver, they just kept them out.
yeah, exactly. They just got their a little bit of
Yeah.
technology, and then they just slowly squeeze them out. And indeed, that is something we have to consider whether that ship has sailed for us. We can't play the China playbook of 10 years ago. Our playbook has to be our own unique playbook. And indeed, when we have so much venture capital in India, when we have introduced the concept of private equity financing, should we actually now suddenly try to close the gates on foreign capital? At the same time, I think there is a genuine concern that data is, if it's in the hands of a few, it could actually be terrible. So in that sense, you have the ONDC framework, the NPD framework, where the government is trying to allow for greater data access. But indeed, Dr. Sharma, the question remains that is the RBI the right person or the right chowkidar to try to do data protection and try to implement the fine principles of the Supreme Court in Puttaswamy's case?
See, let me put it this way. The RBI has ring fenced itself by saying that financial data protection is their business, right? And that is where the banks and everybody's they are trying to govern it through that methods. But here, there is a problem. Like if there was a talk and mention about the European Union. Now, European Union has gone for tokenization, but the card on file is also existing. And if you look at the percentage of tokenization, it is still very, very small. So in the sense, it's a parallel system which is working, and it is not that no card on file and you just go for the tokenization, which, as I said before, is concentrating it into the hands of few of the card managers, right? And this is what it will lead up to. So if you look at the RBI, okay, it is RBI's business to see that the money is safe and the depositor's money is safe, the money transactions are safe, the banking system is operating. To that extent, regulations and everything is fine. And it is giving a boost to digital payments as we are moving ahead. To that extent, walking is perfectly all right. But when it comes into the data privacy issue, then it is very important that whatever systems you are doing, unless until there is an evidence of a big leak, because if I look at the percentage of leak, it is not even 1% in the various transactions and the various growth, or maybe a quick growth we had during the pandemics on the digital payment mechanisms, or more and more merchants were boarding into the entire system, or more and more POS machines were coming into the system. So in the sense that slowly the various systems, whether it is giving credit, giving payments, transactions among the people was going ahead. And let us not forget there is an equal cash economy also running in the country to save taxes, right? To escape from the GST and taxation, the 15 lakh crore of cash is floating in the country. So it is not that we are able to reduce the cash economy to a considerable extent with all these mechanisms. But here, when the data, what we are talking about is a financial data, an individual financial data, which is, yes, the hawk's eye has to be of the RBI, but it has to be in the sync of the umbrella data protection policy, which should hopefully becomes a reasonable, logical policy, because there are still a lot of hiccups into the draft, and it is fine-tuned with the hair comb, and we are able to bring out a better draft out of it. There are many reservations, which I have said it in various forums about it, that when we are talking of data protection, it does not mean no data analytics. Data is meant for analysis, right? But it is the agnostic data which gets into the analytical zone. So the RBI should walk in that much, and the tokenization should be phased over maybe 3 years, 4 years, 5 years, till it is experimented well. Today, the banks are also not fully ready for it. Few banks are coming forward. So if the bank themselves, the card issuer is not ready, then how do you plan to float it down? And the other danger is if the system fails, then what happens? The whole thing will get disrupted. So that is why the redundancy is not today envisaged in the tokenism. So card on file, which is now established, going smooth, has to run parallel with tokenization for maybe couple of years more when we are moving ahead into this. And RBI is responsible. So let us accept this fact that after all, it is RBI's forte to see that the financial transactions are not hacked, are safe, and the money is protected. So that to that extent, they have every right to work.
Absolutely. In fact, and that is exactly the issue where they might be going forward an overlap between the RBI. Maybe that is the bright side of it. Once we have a data protection authority, the RBI will start to trust another statutory regulator more and try to feel that, okay, fine, we don't have to obsess about data security so much. And indeed, as you said, obsessing about data analytics is even more dangerous for the RBI, because data security, one can still understand that they are concerned about consumer interest. Data analytics is something where they are now overstepping into the overarching policy initiatives of the government. So I'll also just bring in my partner Shreya Suri to just chime in on, because as Dr. Ahluwalia mentioned, that some of these regulations are very technical in nature. So Shreya, if you can just explain to the group, what do you see is the key difference between a bank and a merchant in terms of data storage? Why do you think the RBI is facing stress in allowing merchants to have card on file data, and they're perfectly fine with banks controlling that data and accessing that data?
I think there's a sense of a certain threshold of security or false security in one sense that banks tend to give to the RBI, more so because of how closely they are regulated by it. With merchants, the difficulty is that there is no way to really to ideally regulate them, and even the payment aggregator guidelines which have now been introduced are in a way a fix to ensure that merchants are compliant with the laws of the RBI, because they've essentially passed on that obligation to payment aggregators. The reason for their concern, of course, is that merchants are the direct interface with consumers at this stage. So, while banks are the provider of instruments, or rather the bank account and card issuers, but the merchants are the ones who, on whose platform the cards are being used and the money is being utilized. They are the ones who have a direct interface with the customer. Now, the issue for the customer comes in place where every time they want to initiate a transaction, they have to actually key in the card details every single time. And that is the challenge that the RBI is not being able to solve. While they have brought in this regulation to sort of oversee merchants indirectly, they are not able to really solve for the concerns of the customer, where the digital adoption rate, the digital transaction adoption rate is going to suffer significantly. So just like the UPI architecture sort of enables you to key in your bank information in one go, and thereby a UPI ID is provided to you, which is interoperable across systems. Why not be doing the same thing or something similar with your card details? What is the challenge there? Mr. Rastogi, what do you feel about this?
Madam, you rightly pointed out there are two issues, which is the major one. One is that the way the things are moving, progressing in digital payment, regulators are not able to cope with that. This is good point. Though RBI has created various sandboxes, which Dr. Ahluwalia pointed out, they started working. They are also having dialogue with industry players, but somewhere things were missing, and RBI has also realized that, and they have recently created a committee for regulatory review, and they want to review all the regulations which they have so far adopted. They want to see the duplication is not there, some regulation which is outdated should be vanished, and some new should come. A committee was appointed constituted by Reserve Bank of India under Nandan Nilekani for digital deepening, and they have suggested various measures in the following. You rightly pointed out this tokenization is creating a problem, but then we have brought in tokenization, and this is not our requirement. This is requirement of MasterCard and Visa. Because the liability is switching from issuer to acquirer when you do the tokenization. So that point, a decision has to be taken by the government of India or policymakers that do you want tokenization or not? Having followed or having agreed by the policymaker that tokenization is required, RBI is simply implementing it. So there is an opportunity. They are engaging with the policymakers, they are engaging with the e-com players, and we need to tell them that this is not happening and it has to be improved and said that. You rightly pointed out that transactions are not happening, but how many transactions are happening on the card? It is only 3.6% as against 36% in UPI. So are you worried about the number of transactions or worried about the card transaction? And the card transaction, how they're going to, the card is going to diminishing thing everywhere card not present scenario is coming. So as a technology person, I can foresee that what is going to happen 3 years, 4 years down the line. The policymaker has to think that 2 years, in 2018, July, Shri Krishna Committee was formed, and till today, there is no act passed by the government of India. Nobody knows that what are the Security Act and how they're going to follow. So the basic problem with us is that we are not able to tell the players in the digital payment that what is expected from you. And suddenly we keep on changing the expectations without giving them a proper notice. And this is a problem. In June, they said within 6 months, you have to make everything tokenized. Is it possible? 900 million cards can be tokenized in one go. So this is the problem here, not the problem. Only part is that somebody has to take, if you are a regulator, you should take the accountability. But policymaker doesn't take the accountability. That is the problem with this country. When something goes wrong, they blame the regulator. When something good happens, they say, yes, I have done this thing. I'm not saying that RBI is good, but RBI is trying to see that things are moving as per the line. What is happening across the globe? You see the GDPR, how strict law is there. Everybody is following there. If they follow in European Union, why can't in India? So these are the things we need to get the reply from them. Yes, Ms. Suri.
That's right. And what you mentioned, I mean, about being a line that the RBI is working, at what point can the RBI said to have really crossed the line? I mean, essentially, first they started with regulating banks. Then, of course, there were guidelines that were brought in to sort of set up open accounts for payment gateways, payment intermediaries. Then there were more stringent guidelines, specifically because of the data security issue, brought in to regulate payment aggregators, and through them, the merchants. So there is an obvious case to some extent of over-regulation, but also at the same time, what I think the RBI is struggling with is a solution on how to aptly balance consumer interests. And as Dr. Sharma also pointed out, that what this is also trying to regulate is data analytics. So, Mr. Ahluwalia, this question is possibly for you, but in terms of what is trying to happen, I mean, what the RBI and also other regulators are trying to achieve in the industry, while the regulatory sandbox architecture does exist where product testing for new innovative technology is being permitted, but with regulations like this, how much do you think that innovation is likely to suffer, specifically in the fintech space, where to some extent, a lot of players in the industry will not really have data to analyze whether on an aggregated basis or otherwise to actually create new and innovative technology and algorithms. Mr. Ahluwalia, you still on the line?
Yeah, I'm still on the line. I'm just absorbing.
Yeah, so to what pardon?
Sorry?
To what extent do you think such over-regulation is going to hinder innovation in the long run? I mean, while there are frameworks for testing of new technology, but if there is a curve on what sort of data is allowed to be used by different industry players and how it is used, whether in an aggregated form or otherwise, do you see this impacting innovation in the long run in the financial sector?
Well, yeah, I mean, again, not being sufficiently technically equipped to know what the difference of one or the other kind would do. I never actually thought that invasion of privacy would be a very important thing if you were not yourself engaged in any dubious kind of activity and you are not engaged in any criminal activity. But I think I've come around to the view that that's not the case, because the invasion of privacy is amazing. I mean, I extensively engage in both digital purchases and emails and this and that and the other. And I notice that I am bombarded by advertisements from people who obviously have got a sense that, I'm this kind of a person. I read that kind of a book. I've ordered something somewhere. And frankly, it is a little annoying. Now, you might think on the one hand that it's not annoying. They're just trying to find out more about you. And when you're interacting with a whole lot of the local Kirana guy knows all about you, but you don't mind because he's a little local Kirana guy. But if some giants kind of learn all about you, and you begin to find that you're being fed information tailored to all this knowledge, you kind of wonder that the external environment that's been created is not really a very healthy one. Having said that, I do worry a lot that the biggest danger is overregulation. I mean, if you get into the mode of thinking that Big Daddy should know what you're doing, even if Big Daddy doesn't really know what they would do about it if they knew about it, the chances are that you will get an overload of regulation. So frankly, that's why I felt that in all these things, a certain period of allowing regulatory sandboxes where you don't overregulate and then see what the problem is. I think if you step back, I think you need, in all these debates about what is good seem to be, in one sense, driven by concerns about national security and, of course, also financial stability. I mean, you don't want people who are engaged in something prejudicial to national security to have their scope expanded. But exactly what you can do about it is really not very clear. I mean, I remember when I was in Mr. Rajiv Gandhi's office way back in the mid-80s, and people were talking about, cell phones had not yet arrived, and they were not actually, in any case, commercially viable. But people were talking about handheld phones, satellite phones, and all this kind of stuff. The natural instinct of the intelligence community was that these things will only help terrorists. But the truth of the matter is that while they do help terrorists, you can also track terrorists from them. So I think that if you allow technology not to come into play, you may end up losing a lot. That's why I think you need high degrees of flexibility. But the problem today, I think, was implied by one of the speakers earlier, I mean, the global pattern is being set now by the United States on the one hand, Europe on the other, and China as a sort of a separate thing. Now, China, by the scale of its GDP and the size of its economy, has in fact become comparable to these guys. Regrettably, we are nowhere there. So it's just completely nonsensical for us to pitch ourselves at that level. But it's not very clear. I'm very clear that the Chinese way is not the way to go for India. Maybe a bias, maybe a prejudice, but whatever it is, we should watch what they're doing. I don't think we are running the kind of system that can look for efficiency by doing things the way the Chinese do. Actually, in our system, whatever we do will just get captured by people who have vested interest in promoting monopoly and inefficiency. And the loss of competition will be a big problem. I think it's also true in the world that people now regard Europe as a backwater, as an intellectual backwater. I mean, they do not believe that the Europeans are in any sense leading. And in fact, that they're more likely, partly because the European Commission and the European Union places a kind of additional layer of bureaucracy over the normal national layer. And most people think that that's actually leading to a very cumbersome sort of system. Then you're really forced into one of three options. I mean, either you say to yourself that you're going to be like the Chinese, which I think would be a mistake, or you set the US as the relevant standard, in which case you do have the problem that it's a very highly corporate sector driven system, but they are themselves beginning to discipline the corporate sector. So, I mean, they're not very happy with what Mr. Zuckerberg and his friends are able to do. So we need to watch what those guys are doing. And of course, the worst thing we could do, in my view, is if we say, well, since everybody's got their own standard, let's just have our own standard. And I think that, frankly, would be a mistake. We're not in the league to be able to set up purely Indian standards. So let's remain flexible and let's be willing to change our positions as we gain experience. That would be my rough. I think it's also, by the way, important when you look at economics to be clear about what are the different interests involved and what is it that you're trying to protect. I mean, the different interests involved is one is the domestic versus foreign, and the other within the domestic is big versus small. And we cannot logically say that we're going to keep all the foreign stuff out, particularly if the domestic big players are going to become big, then maybe the foreign big players are the only ones who can discipline them. So in terms of the consumer interest, having these two compete with each other may well be better than simply keeping the foreigners out and letting the big domestic fellows take over. I think the second issue really is whether the way these platforms work, they work to the disadvantage of the very, very small. And frankly, my guess is that they almost certainly will. I mean, for the simple reason that when you get into a world of high technology, compliance costs alone will make sure that very, very small operators will just not be able to bear the compliance cost. But we also are running an industry which is grotesquely dominated by minute players. I mean, 90% of Indian producer units employ whatever less than 10 people. I mean, that's really not a basis for creating economic strength. So actually, we need to strengthen what we call the small and middle sector, but we need a lot more of the small guys becoming middle. And frankly, the implication of that is that many of the small guys who don't succeed will just get weeded out. I don't think people are politically ready to accept that. I mean, the slogan that all political parties give is that the SME is the strength of India. But if you go into it, many people would also say it's the bane of Indian industrialization. Because in terms of numbers, there's a proliferation of small units which hire very few people, not able to provide them with a decent kind of social security or indeed a decent wage, and not really able to scale themselves up in order to become more productive. Now, I'm not sure that there are too many people willing to face this. You don't have to face it too much, but you have to know in the longer run. I personally think we have a lot of big guys, and that's, I mean, not a lot, but we have big guys. But the big problem in India is the middle is nowhere near large enough, and there are not enough of them. So if you're going to have many, many more of the middle, then many of the smaller guys are going to get phased out. And I think the technology is going to make it easier for them to phase out. I mean, the technology will make it a lot easier for smaller middle companies to compete with big companies. I don't think it's going to make it easier for the minute companies to compete with the middle companies. All very confusing and not well thought out. But that's why I'm just a passive listener.
No, but those are some great thoughts that you've shared with us and a lot to think about in general. So yeah, I think we can also possibly take some questions from the audience now. I think we have our first one. And perhaps Dr. Sharma can answer this. Although, I mean, we've discussed this at length, but Dr. Sharma, if you do have anything else to add over what Mr. Ahluwalia said, the question is, given that the digital adoption has been catalyzed during the pandemic, especially by merchants and customers who are not very tech savvy, will an overreaching framework have adverse effects on the economic growth and recovery? Dr. Sharma, you're on mute.
Question first, and then I'll put my comment. Yes, because there is going to be a disruption in the technology point of view for the merchants, and the customers have got used to ease of operations, because when we encourage them to go for the digital payments, the whole bane was to ensure that it is ease of operations, ease of transactions, easily to do it. They don't have to carry their passport, checkbooks, this, that. They don't have to visit the bank. Now we expect them to remember those numbers and feed them every time, and tendency to make a mistake. All that is going to have a little adverse effect and going to put it on hold. There is no doubt about it. Then what you're talking about, the adverse effect on the economic growth and recovery, because if you look at the spread of the e-commerce, even though it is 4%, at the rate at which it is increasing day by day, and the way the transactions are happening, whether the manufacturers are boarding this and moving ahead, all your exchanges are taking place through these transactions, the money transfers are taking place through these transactions, it is going to increase in leaps and bounds. So therefore, if you put the customer as a center phase, it is very important that there has to be of ease of operation and not make it complex. And that's why the repeat payments were allowed into the entire card system. Having said that, Mr. Ahluwalia very rightly pointed of the overemphasis from the security point of view. If you look at it, and I have been talking about it in various forums, that data in different places is stored and secured, and that leakage is not going to give much of the information either to intelligence or to the security or to the cyber security. The detection of cyber crime in financial terms is quick. We had 2 bad incidents and certain immediately identified. The problem was your reaction time. In one case, the reaction time was couple of minutes. All the transactions were reversed immediately. In second, because being a weekend, they decided to lie low and waited for Saturday and Sunday. By Monday, the damage was done. So it is not the detection of the cybercrime or in the fintech or the financial system is the matter of worry. It is the matter of reaction time and how quickly you react. That is number one. Number two, wherever there has been a leakage, it is because the people have exchanged their security numbers or CVV or the PIN numbers with the people not concerned, and that's how they have been duped. Now, if we ask them to multiple times do it, which they may not be capable of doing, it is going to have an adverse effect. Therefore, the security has to use this only as a way. And if you look at the end-to-end encryption debate, the moment I say I want to know the origin of a message means end-to-end encryption is not there. Technically, it is not possible that you give an end-to-end encryption and then you say that no, I want to know the origin of any message which is coming, and which message nobody knows, the amount of garbage data which you are going to collect over a period of time. So therefore, it is very important as we are moving ahead into this that security, yes, overemphasis or being guided by the fears, unknown fears or apprehensions to make your system is not something very intelligent way of moving ahead with it. And India, when you have a Digital India slogan, a clarion call for it, and we are moving to the digitization, not just of the data, but on financial transactions, everything has to move carefully. That okay, nobody is saying that if you feel that by token system is a better way of moving ahead, then give a breather, involve the merchants, involve the not just the bank card issuers but also of the systems, because that is the way it is going to operate upon, and that still needs discussions, that still needs debate. So there cannot be sunset clause that it will get executed from this end, because even the bankers are not yet ready to adopt that system. I hope I have answered the question clear. Absolutely.
Thank you, Dr. Sharma. Those were some useful insights. And yeah, I do think that there are a lot of additional ways to manage data security issues in the payment space as well. One effective way would also be, I mean, of course, to augment everything else that is trying to be achieved here, is also to invest some more resources and time possibly into consumer education. So, yeah, that is another way to possibly go. I have one more question for Mr. Rastogi from someone in the audience. The question is, Mr. Rastogi, for you. While RBI's mandate is to protect customers, shouldn't it also have a responsibility to foster the economy and make transactions more convenient?
Okay, so I think this question is better pointed to RBI to answer, but then as per the law and as per the Constitution of India, RBI is mandated to protect banks and banking customers. Now they have added a few non-bank like mobile banking and others, and they are supposed to watchdog to see that nobody is at disadvantaged position, and the money which they are keeping with the bank and non-bank entity to remain safe. That's it. I fully agree with Dr. Sharma that it is a knee-jerk reaction, and they have given a timeline up to this summer. We need to have a dialogue with them, with RBI, and find out a way out. It is too early, 3 months, 4 months time, we cannot do it. But more or less, we need to have a very comprehensive law for data security and localization. So all the confusion can be taken out, and people, by and large, the technology service providers or e-com players should be aware that where they are supposed to do and what is the timeline under which they can do it. The third thing is that, for technology service provider, yes, RBI is keen, and RBI is also working on a PSD2 kind of structure where non-banking entities, if they are allowed by the Government of India to be regulated, in that case, they will be allowed to exchange the APIs with the banks, and they'll be having a level playing field with them. So this is a discussion going on at top level in the government of India, depending on the whatever the directions given by them. Yes, RBI will also accommodate non-banking entities in their regulatory forum. That's my reply.